Welcome to the Colorado Real Estate Leaders Podcast, brought to you by Trailstone Insurance Group, bringing you interviews with Colorado's best real estate and mortgage professionals, empowering you to understand the current trends in the housing market so you can make the American dream your reality. Enjoy today's episode.
Well, it's a great day in Colorado, and welcome to the Colorado Real Estate Leaders Podcast. Today, we have with us George Mugerian, who's the president of Give Financing. George, welcome to the program.
Hey, thanks for having me.
Hey, so I want to learn all about what you do, how you do it, and why you do it. And I love the idea of Give Financing, so I want to hear the story behind that too. But get us started with your story, your background, and how did you get into the financing, mortgage financing industry in the first place?
Sure thing. Kind of stumbled into it. First job in out of college was in mortgage. Literally didn't know what a mortgage was when I got the job. And I figured it out eventually. It took me a little bit, but kind of stuck with it. Really loved all aspects of the industry. Helping people buy houses was just exciting thing. Kind of being young in my career. And then as I went from a couple different companies to starting my own company, and just kind of the whole journey along the way. Just I've always loved the power of real estate and what it can do to somebody's financial situation, and helping somebody along that journey to me is just really rewarding, and couldn't imagine myself doing anything else.
Yeah. Well, and I think that's a really huge piece is, remember, I think it was attributed to Henry Ford that says, if you enjoy what you do every day, you don't really have a job, because it's just like, I enjoy what I'm doing, and I'm serving people and helping them achieve their dreams. So I think that's cool. Where did the name Give Financing come from?
So it was my wife thought of it, actually, so I got to give her props on that. But the concept was, when we started the company, was we want to give back to those who are in need as well, rather than just closing mortgages. So we made a promise to make a donation on every transaction that we do to a charity of the customer's choice. So that's kind of been a part of our mission, and the term give kind of really just evolved to really giving value to all parties in the transaction. So whether it's a donation, or whether it's providing value to our realtor partners, or providing value to our borrowers, it's the whole idea of doing something unique, doing something that actually provides value, rather than just being another mortgage company. Because we know there's a lot of mortgage companies out there. Consumers have a lot of choices, and frankly, there's a lot of great companies out there, right? So how can we be different? So we always kind of want to be on that cutting edge, doing something truly unique and different that's providing value.
That's fantastic. How much have you guys donated on behalf of the clients?
So since we started, it's around 10 grand, just under $10,000. Worked with fund to help out in Ukraine back when that conflict started. Worked with the Food Bank of the Rockies. And then a bunch of other organizations as well that the customers chose to donate to. So it's kind of cool seeing what causes that customers choose to support.
Sure, yeah, that's awesome. A lot of things going on in the market right now. How is home affordability affecting buyers today, and what are some of the solutions that your team can offer?
Yeah, so I mean, obviously a big issue is affordability, not just of housing, but frankly of everything right now. I mean, housing is going to always be somebody's biggest expense. So that when we have unaffordable housing, we probably feel that more than paying $8 at the grocery store for eggs. That hurts too. But paying a 7% rate hurts even more if you're in the market to buy a house.
Sure.
So we've kind of had this perfect storm in Colorado, and across other states as well, of prices rapidly increasing year over year over year, and just now we are in a high interest rate market. So now we have this double-edged sword of high prices, high interest rates. So that's the problem. What's the solution? We have kind of gone back to something that is completely outdated to try to help bridge the gap of affordability, and it's called a loan assumption. So these haven't been a thing in the past 15 years because rates have always been low, but we see this as a very powerful tool to help buyers get an affordable payment and actually have a their cake and eat it too, if you will.
Sure, walk us through it.
Sure. So essentially, what a loan assumption is rather than an origination where you go out, you find a house, you call the bank, and they say, "Hey, we'll give you the $400,000 for the house. It's at a 7% interest rate. Here's your payment." What happens with an assumption is you can actually inherit the seller's terms of their loan, which, based on where we're at with interest rates, that's always going to be substantially lower than what you can get if you go to the bank today. So if the seller has a 3%, 30-year fixed, 4%, whatever it might be, I mean, there's still some 2% loans out there. That's something that can be transferred to the buyer, and that has an immense impact on not only their monthly savings, but the amount of interest they're paying over the life of the loan. It's absolutely game changing. So we've developed a program to help facilitate the process the same way we would do an origination. Obviously, that's what we've done for years, but now instead of doing an origination, we do the same thing for an assumption. A little different process, but same idea. So we're kind of the liaison between the buyer, the seller, and then the lender to help facilitate the assumption process.
So, George, in an assumption, it would work if that's a better deal than what you can get currently. So that's great. But if it's way back in the old days and rates were in the 12, 14%, you're not going to want to assume that. So obviously this is, hey, rates have moved. This loan is assumable and you're going to get a better rate than you could today. Talk a little bit about the qualifications. So if a new borrower is going to assume a loan, is it the same exact full qualifications of getting a new one as well?
It's pretty close, but believe it or not, it's less stringent. The biggest thing is there's no appraisal required on an assumption, so that makes things a lot easier. And then also from the seller's perspective, there's no question mark on the value, because that's a tough thing for sellers to swallow sometimes. If they got a cash offer, if they got financed offer that has an appraisal, sellers tend to lean towards cash offers. Now, an assumption is nowhere near a cash offer in terms of timeframes, but with the absence of having to do a valuation check, that's a big, negotiating tool for the buyer, right? Other than that, the buyer still has to qualify based on that agency's guidelines. So they still need to have the minimum credit score. They still need to have the debt to income ratio that's going to qualify. And so the lender's still going to check those things to ensure that the buyer is still a credit-worthy buyer.
I think that it's in any sort of a tumultuous environment, if you can do something and offer something that stands out from the crowd, and I know an assumption is like that's been around forever, but now it's kind of like if you're bringing it back to vogue and you can talk about that and that helps people get into something quicker, faster, better rate. That's a huge opportunity. I love that. And yeah, you're not going to just, every single person cannot assume a loan. It has to be qualifications, but I like how you mentioned it cuts the time and appraisals and all of these things are already in place. That helps out. I'll bet that also helps your real estate partners with moving properties if it's an assumable loan, because now they can get out in front of earning more business as well, right?
Absolutely. Yeah. So that's kind of, who we've been marketing to this product to recently is specifically the listing agents of these qualifying properties, because not every property qualifies. So it has to be a government loan to qualify. So FHA, VA, or USDA. Conventional loans don't qualify. So any government loan that the listing currently has that loan, then that's a great candidate for the listing agent to market this. One, if they have the listing already, say, hey, seller, this could be a great opportunity for us to, actually maximize what we're going to sell for, because we can pass down these savings to the buyer. It's truly a win-win, because the buyer is still going to save money. And even if the seller can sell maybe for 10, 20 grand more, that's nothing compared to how much the buyer can save with the lower rate.
Yeah, yeah, for sure. So talk a little bit about, have you done that for property and a real estate agent, and all of a sudden at the back end of the transaction, they're like, this has been monumental. This was amazing.
This is a brand new product for us. We only have 2 of these in processing right now, so we are still learning as we're going. So far, so good with everything, but it has been a bit of a learning curve for us to roll this product out and start getting it to the market. Because the thing that we've learned too is it does take the right buyer, the right seller. It kind of has to be a good marriage, right? Because it's not going to be perfect for everyone. The biggest cons to these deals are the buyer's going to need more of a down payment than an origination. So there's going to be less buyers that are going to just be able to do that. And then on the seller side, these assumptions do take a little bit longer than origination, so they have to be, willing to wait a little bit longer to sell. So it takes a seller that's willing to trade time for dollars, right? So if they're not in a hurry to sell and they can market this, sell their property for more than they could otherwise, it could be a great fit.
Yeah, that's true. It just gives you another arrow in the quiver of serving your clients with a unique opportunity. What are some of the other loan products that you're finding that your clients are needing, requesting, and that's fitting into today's market?
So yeah, other than that, down payment assistance has always been a big product. So we have, multiple down payment assistance options, and that's kind of been growing in popularity too now, because the market's kind of shifted a little bit to be more acceptable to seller concessions. So, in a market where we can get seller concessions on pretty much any offer, down payment assistance loans are a really attractive option for a buyer to get into a house for $1,000. You can't beat that.
Yeah.
So that's kind of been, coming back in popularity. I think when the market was super hot during COVID, that kind of went to the wayside a bit because those buyers unfortunately got, priced out of the market with cash offers. Other than that, we've had a product called our guaranteed pre-approval for a little while. That's been popular. When the market was hot, when the market softens a little bit, that's not quite as popular, but still a great tool for somebody that qualifies. Essentially, with that program, if the buyer checks all the boxes, for our requirements, we'll actually personally guarantee their earnest money, allowing their financed offer to compete with cash offers. So that's something that can help give buyers an edge when the market is more competitive, or maybe the listing that they really want has multiple offers on it.
Yeah, that's a really good point. And we've mentioned market shifting. Obviously, you can, go to whatever day in the calendar and look at the rates, and rates are going to fluctuate up, down, and all around. And it depends on whether it's a buyer's market, seller's market, refi market. So rates do change. What are you finding these days when it's not a refi market and it's more of the purchase market? Are you finding a lot of that percentage being first-time home buyers? Are you finding people are now going to buy a second home or investment property?
In this market now, who do I see as more of the populist buyer?
Yeah.
I'd say it's unfortunately less first-time home buyers. I think a lot of them have kind of gotten priced out of the market with prices going up and rates going up. I see it more as the buy sell, buyers that are doing it for good reason, right?
Yeah, they have to.
Like,
they got a job, they have to move, or something like that.
Yeah, it seems like it's more of a necessity if you need to buy now rather than a luxury. I think we're seeing a lot of people sitting on the sidelines, seeing what rates are going to do. Which is that a great strategy? Maybe it is, maybe it isn't. I don't have a crystal ball, but what I do know is when rates were really low, we had one of the most competitive markets I've ever seen, and basically buyers were competed out of the market then.
Yeah.
So now, if you might not like the interest rate, well, at least you can get the offer accepted. And the old realtor adage is marry the house, date the rate. So get into the house, get a better deal than you could have a couple of years ago during the COVID craze, and refi when rates go down, because our rate's going to stay this high forever. I would doubt it.
Yeah, good point. What do you do with investors? What are you seeing investors doing these days? Because anytime markets shift, you will find people that are positioned well to take advantage of a shift and maybe buying single family residence, buying duplexes, fourplexes. What are you seeing in that regard?
Yeah, I mean, we're still seeing a lot of investor activity. I mean, there's still, especially fix and flips. I don't think that has slowed down much. I mean, obviously rates have an impact on that to some degree, but if that eats into your profit margin on a fix and flip, 5-10% overall, it's the price you pay, I guess. But I still see activity there. I think we might see a little less buy and hold investors out there because it's not as easy to find cash flowing properties. But the long term focused investor is still going to do well in this market because chances are the property is going to be valued higher in the future. It may go down in a year or two from now, right? Nobody knows the future, but if we look 15, 10, 20 years out, you're always going to do okay in real estate, right? So
Absolutely. Yeah, another adage is the best time to buy a house is 20 years ago or today.
right. Yep.
And so, yeah.
So what are some final thoughts there, George? I think I love your approach to giving and serving. I think that sets you apart. I love your assumption, angle that sets you apart. If someone, what would you say to someone that is either a first-time home buyer or looking to get into their home? What is the some of the points that you would bring up to them so that they can be prepared for an initial call with you?
Yeah, I mean, I would say, don't have paralysis by analysis, right? I mean, see what your options are. And there's only so much Googling you can do and reading articles and watching videos and listening to podcasts like this. Really the best thing you can do is hop on a 10-minute call with a loan officer. Whether that's me or somebody else, I mean, that's really going to be where you're going to get a lot of education and see what your options are and if it makes sense for you or not. Maybe it doesn't, but I guarantee you're going to leave that conversation a lot more educated than you went into it with. Other than that, probably the basics that you want to prepare are going to be your credit. The better credit score you have, the better financing terms you're going to get. And down payment, shouldn't hold you back too much because, like I was saying before, there are a lot of great down payment assistance programs. So if that's something that you're unsure of, you'd be surprised. Those programs are pretty available and pretty easy to qualify for. So really the biggest thing is your credit. As long as your credit score is in decent shape, I think it's worth a call to see what your options are to a mortgage company and see what you can do.
Excellent. So what's the best way someone can learn more and reach out and connect with you, George?
Probably the best way to get me is on my email. So it's just george@givefinancing.com.
Excellent. And then we'll make sure we have your website and LinkedIn's hot link for the show notes so people can click on that right from listening to this episode. So thank you so much for coming on today. It's a real pleasure talking with you, George.
Hey, thanks for having me.
Thank you for listening to the Colorado Real Estate Leaders Podcast, brought to you by Trailstone Insurance Group. To learn more about the topics mentioned on today's show or listen to past episodes, visit www.coloradorealestateleaders.com.